won't stop till I hear him say,
Warning: the information that we convey in these videos and the content on this page simply provides general consumer information. It is not legal advice or regulatory guidance. It is not intended to sway your personal bias in any way. We are simply just relaying information already available to the general public. We highly suggest you do your own research and draft your own opinion on the topics disclosed in this video breakdown. Without further ado, sit back, relax, enjoy this video breakdown, and if you're not already subscribed to the YouTube channel, consider doing so now. Okay, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. In today's video breakdown, I have a very intuitive XRP technical analysis breakdown for you guys. We're also going to cover two fundamental articles, so make sure that you stick around for those. If you all enjoy video breakdowns like this, make sure that if you guys enjoy intuitive video breakdowns like this on the technical analysis side of things, which we teach here at CYPRX, you smash that thumbs up button, help boost the YouTube algorithm. Because we are shadow banned here, it is hard to push this content out to more individuals like yourselves. We really do appreciate the love and the support. Anybody that is interested in the technical analysis mentorship program, you all are more than welcome to reach out to me via email. The link is in the description down below, or you can just visit cyprx.teachable.com. I'd like to take a second real fast and just shout out to some of the CYPRX students who have been extremely active in the chat lately. We also had KJL, who just recently passed his first phase in his prop firm challenge, so shout out to him as well. Here's a screenshot that he sent to the group in the GBBJPY chat. I know that this video has nothing to do with Great British Pound against the Japanese yen, but just like to give a shout out to some of the students that are really partaking in the technical analysis that we teach here at CYPRX, and it's really showing via the hard work that they're putting into this market. So here's even a couple of tweets from Justin. He's one of our extremely influential traders here at CYPRX. He catches moves all the time. Absolutely phenomenal technical analyst. You guys can see here, he just said, posted on October 3rd, just another CYPRX Monday. Beautiful risk to reward ratios that he's placing across the board. Okay. And then we also have another one. Here's Jeff. He's a very intuitive trader here at CYPRX as well, catching the same exact trades as Justin. It's phenomenal to see the students. I even mentioned to the students that it's phenomenal to see multiple students across the board catching the same exact trades via the technical analysis that we teach here at CYPRX. So with that being said, I want to make something extremely clear before we get into this deep dive on XRP. And this is going to be one of those deep technical analysis dives that you're not going to want to miss. So make sure that you stick around for that. But okay, I tweeted out to you all just a second ago that the biggest thing that people must understand about the majority of influencers on YouTube and Twitter is that they are investors, ladies and gentlemen, not day traders. They are not day traders, ladies and gentlemen. If you are watching people on this internet space draw Fibonacci sequences and talk about bullish price predictions and things of that nature, but you're still waiting around for now 3 years, waiting for these price predictions to come into fruition, you have to understand that you took trading advice from an investor, not a day trader. There is a difference. And so I continued to follow this tweet by saying a lot of people fail because they don't determine the difference and figure out ahead of time what type of market participant they want to be. Ladies and gentlemen, there is an extreme difference between an investor and a day trader. Now, I've preached to you guys multiple times before in the past that I have two XRP portfolios. One, obviously, of course, is my long-term bag. That means that I just buy and hold. And I've told you guys my price targets in which I purchase my XRP at. I don't buy any long-term positions on XRP above 32 cents, mainly because I accumulated the majority of my XRP back in 2016, 2017, when price was below, obviously, of course, 32 cents. With that being said, to switch over to my leveraged portfolio, right, where I trade on a leveraged account utilizing CYPRX as my broker, which I have told you guys before in the past as well. I have no affiliation with them or anything like that. You guys can go check them out. You can even open up a demo account if you're interested in trading crypto leveraged, okay? And you can start practicing utilizing our strategy or maybe some other, I don't know, whatever strategy you might find on YouTube. I don't know. Okay. But anyways, if anybody's interested in that, again, check out CYPRX. You can open up a demo account trading XRP leverage. There's two types of traders in this market, ladies and gentlemen, investors and day traders. The majority of people on the YouTube space or the Twitter space that you're taking trading advice from, right? We like to say not financial advice, but we know everybody's taking signals from each other, ladies and gentlemen. That's just facts. A lot of people don't know how to trade these markets, and so they seek to find answers from these influencers that have, 50,000 plus subscribers. But the majority of influencers traders on the Twitter space and YouTube space are simply just investors. They're long-term hodlers. They have no technical analysis experience. They have no foothold in this market, and they have no credentials. Okay, here at CYPRX, we actually have valid trading credentials. I've been involved in the forex space trading currencies for over 7 years now. We have a licensed LLC here at CYPRX. Again, ladies and gentlemen, do your intuitive research. Trust in people's actions, not their words. Okay. So, with that being said, to take your attention to the actions that we represent here at CYPRX, I'm going to give you guys a little insight on a tweet that I posted out on October 3rd, way before the price action played out. Always giving you guys a heads up. If you guys don't follow me on Twitter, you know that you can do so. The best way to do it is to copy the link in the description down below. Mainly, again, because we are shadow banned, it's hard to actually find our name on Twitter. Okay. So, I said to you all, not financial advice, intraday trades, setting up 1 to 3 risk to reward ratios, October 4th through the 5th. Today is October 4th, and I tweeted this out a day in advance for you guys. And I said, utilizing the CYPRX 2.0 technical analysis strategy, it will play out to the T, letting you guys know in advance on both XRP and ETH. Now, I trade XRP and Ethereum on leveraged accounts, again, utilizing Osprey FX as my broker. I said the set, sweep, go method will come into fruition. And I also mentioned to you guys, London will set the liquidity. New York will execute the move, the sweep and the go, finishing off by New York rollover into Asia session. So with that being said, again, remember, London will set the liquidity. New York will execute the move, and the sweep and the go move will finish off during the New York rollover into Asia session. So now we're going to go over into the extreme technical analysis dive on how we were able to catch this move here at CYPRX. And we had other students as well catching this trade, seeing this setup. We even had a student mention that they were eyeing out the trendline liquidity to the upside as a potential target for take profit areas. Ladies and gentlemen, again, CYPRX strategy is extremely algorithmic. We trade based off of time. We trade based off of price manipulation. We trade based off of psychological levels. We do not trade retail patterns. If you trade retail patterns, basing your trades off of magic Fibonacci sequence numbers, or all these retail methodology patterns that you can go out there and find for free on Google, 9 times out of 10, you are going to get annihilated, because banking institutions, the major key players that actually move this market, they do not trade those patterns, ladies and gentlemen. Remember, okay? You are an ant in this market, most likely involving yourself in this market with capital of less than $1 million. Okay, even capital in this market of $1 million still barely moves this market. Okay, it still barely moves this market. You're talking about hundreds of millions of dollars to move this cryptocurrency market, ladies and gentlemen. All right. With that being said, understand where you fit, what category you fall into, and understand that you barely scratch the surface on moving this market. Therefore, retail trading patterns should not entice you to buy or sell. Okay, so here you guys can see London session indicated by my blue line. My blue vertical line right here is when London session opens. Okay, and I told you all in the tweet that I mentioned London will set the liquidity. Well, here is that set of liquidity. London set a high for New York session to come and grab. Remember that the market makers must make money when they move the market. So you have to determine prior, if you're going to be trading New York session, you have to determine what market direction the market is headed in. Okay. How do we do that? We start to identify structure. A lot of people will say that hindsight testing is rubbish, but if I backtrack price action to the start of New York session before all of the price action played out, how could you have determined that price action was bullish? Well, ladies and gentlemen, it's extremely easy. You go to the start of the daily candlestick open, which we all know if you've been watching this YouTube channel for quite some time, is where? During the Asia session open. This is the general vicinity where the daily candlestick opens, where the FX markets and the stock markets reset themselves. The cryptocurrency markets never sleep. However, this is where the daily candlestick resets itself. Well, what did the market do? The market set a trend line liquidity trap. Here's 1 touch, 2 touch, 3 touch, where we can imagine coming into the new day's worth of price action rollover, we have over leveraged buyers beneath these levels. And I've just mentioned to you guys that the market makers must make money before they move the market. So what does Asia session do when the new daily candlestick opens? Again, printing bullish order flow. They drop price down into a low, liquidating any over leveraged buyers here, liquidating any over leveraged buyers here. They buy from a discount from where New York session bought the previous day. You guys can see, again, utilizing the piggyback methodology, we can see 2 institutional levels where the New York session traders bought XRP the previous day here in this area breaking previous market structure, and then they bought again, dropping price down at the discount, and bought price action again before we rolled over into Asia. You guys can see that Asia manipulated price during the manipulation window, tanked price into a discount, and bought from where banking institutions during New York session bought from the previous day, and then they continued with bullish order flow, making after the liquidity grab higher highs and higher lows. Coming into London session, we would have been able to analyze all that, and we would have been able to determine that the market is still printing bullish order flow. We would not be sellers logically until what level is broken. If you guys can answer that question, then you're ahead of the curve and you've been paying attention to the content that we've been putting out to the general public here at CYPRX. If you answer that by saying the daily low, then you are correct. In order for us now to be bearish on XRP looking for sell positions, we need to take out the daily low. Well, if this is where the daily candlestick opens, then this is where the daily candlestick low would be printed in at. So in order for us to reverse our bias from bullish, which it currently is as of right now, until this level is broken, to bearish, we would need to see a fractal break in structure beneath this daily low. We would need to see the market retest that structure in the form of a lower high, and then we would need to see fractal price action, lower low, lower high formation underneath of psychological levels. That would be the only thing, ladies and gentlemen, that would logically reverse our bias from bullish to bearish. I hope that I'm breaking that down in extreme detailistic perspectives for you guys to understand. Okay, so now that we've determined, right, that the higher time frame, i.e. the daily time frame, is bullish. Why? Because the market is showing us a willingness to grab liquidity from lows and make new daily highs. Here's a daily low that is higher than the previous daily low, and now we've made a new daily structure high. So the market is printing bullish order flow. We can then go into detailistic perspectives on how we were able to trade New York session. And again, I'm just giving you a breakdown. Why is this magnet tool clicking? That's annoying. I'm sorry that that keeps popping up. I don't know why that's popping up. So we are able to determine that the market is bullish, which gives us a higher probability for a trade to go in our favor to the upside. Now, in the tweet prior to October 4th, which is today's trading day, I mentioned to you guys that London was going to set the liquidity. Well, here you guys can see people that are selling premature to New York session are selling and guessing tops. Ladies and gentlemen, they are selling based off of this bearish price action, thinking that because the market just rallied bullish that it must turn around, and they are wrong. You need to determine the higher time frame bias. Trade with the trend. The trend is your friend. I'm sure that you've heard that before. If you've been involved in this market for quite some time, then most likely you've heard that statement. A lot of people will ignore that and they will just do whatever they want in this market and get annihilated. And guess what? You can be the type of person that continues to do that, or take it upon yourself to mature and develop as a profitable trader and decide to listen to another profitable trader and then judge accordingly. Okay, so London set the liquidity here. We were able to determine that based off of premature sellers prior to New York session. So now we'll go ahead and we'll play price action out just a little bit. So once we entered into the manipulation region, again, I'm not going to give you guys specific times, but here's the general manipulation window for New York session. Again, that wouldn't be fair to the CYPRX students, but we can see playing price action out during New York session open. Where's one of the things, and again, this is what we're going to cover. We're going to cover patience, not chasing momentum candlesticks, waiting for proper risk to reward ratios, waiting to trade after the window of manipulation, and identifying logical reasons as to why the market could continue bullish. But one of the main things that we can pay attention to here at CYPRX is, where did price action get past when New York session opened? Ladies and gentlemen, I say this to you guys all the time, at a high. Okay, price action as soon as New York session opened and this candlestick was at a high. 90% of traders would see this massive impulsive move and they would FOMO out. They would FOMO out of the mouth. That means fear of missing out, and they just start buying price action. Even back a couple of days ago, last week on Thursday, when that news came out, right, with Judge Torres saying that she wants to see the documents, I even told you guys that there were people buying candlesticks. There were people buying bullish candlesticks, right? And guess what happened? Everybody that bought the news late got annihilated when price pulled back. And then now we see the market rallying up to those highs again, where the market did when that news fundamental came out that everybody was FOMOing out of the mouth about, right? It's so interesting to say the least how it's all playing out now, right? So anyways, patience by not chasing momentum candlesticks. So when you see momentum candlesticks like this again, and you're not involved in the market, you need to immediately say to yourself, I need to sit on my hands and I need to wait for a trading opportunity. I need to wait for a sound risk to reward ratio. Entering into the market when the market's pumping like this, you've already missed the move. Immediately when you see candlesticks like this, ladies and gentlemen, you need to say to yourself, market participants, i.e. the banking institutions or private investors with millions and billions of dollars, okay, they're buying XRP down here. They're not chasing the market. How can you determine that? Because remember, us as retail traders, we do not have the money to move the market from A to B. So that means that if you're not involved in the market in a buy position down here, okay, you're chasing the market like the rest of the retail herd if you're entering in during this pump. Wait for a sound risk to reward ratio, and 9 times out of 10, the market will allow you another opportunity to place a sound risk to reward trade. So that leads us into number 2, waiting for a proper risk to reward ratio. Well, with that being said, coming into the New York session, we need to place our stop loss under a logical area that would determine that the market is a potential reversal signal if it breaks a specific level, a liquidity sweep beneath a low. And from that liquidity sweep, the market makes a higher low that leads to a higher high formation. So this is structure. Here's a double bottom formation. Okay, again, a retail trading pattern. You guys can see, I'll zoom in right here. This candlestick wicks beneath that, and we create a higher low after the liquidity grab or the liquidity sweep and a higher high formation. So here's a higher low that leads to a higher high. So logically speaking, ladies and gentlemen, where would you need to put your stop loss? Again, waiting for a proper risk to reward ratio to play out. Your stop loss would need to go beneath the liquidity sweep or beneath the higher low that happened prior to the liquidity sweep, because if either of these levels are broken, we have to determine that the market is now making lower lows, lower highs, and lower low formations, which is the definition of a what? A downtrend. If the market breaks fractal structure and starts to make lower lows underneath of these higher lows, then that is a potential signal that the market is ready to dump or reverse, okay? So you're waiting for a proper risk to reward ratio, right? So you're seeking to buy when price is at a discount from where previous market participants bought before. I've told you guys multiple times to pay attention to the higher low after the market sweeps liquidity that leads to a fresh market break in structure, as you guys can see here. Okay, so with that being said, another key indicator for us here at CYPRX is to wait to trade after the manipulation window. As you guys can see, I have the manipulation window drawn on for New York session, and our trade today took place right outside of that manipulation sweet spot. As soon as the market set up a liquidity trap in the form of a double top or premature sellers prior to the New York session, we see London set liquidity, which I mentioned to you guys in the tweet. We see the market sweep liquidity beneath a double bottom low that leads to a market higher low and a market higher high break in fractal structure previous to the market structure beforehand. And you guys can see that as soon as New York session opened, what do we get? We get premature sellers selling double top formations or attempting to try and sell New York session based off of bearish candlesticks, not understanding the market is higher time frame respecting bullish order flow. Okay, so we're waiting to trade outside of the manipulation window. And last but not least, identifying logical reasons as to why the market could continue bullish. So again, paying attention, waiting for a proper risk to reward. Once this price action broke a previous market structure and created a higher low after the sweep of liquidity, all we needed to do was take our Fibonacci. Again, this is how you properly utilize your Fibonacci tool. There's thousands of YouTubers out there with over 20,000 YouTube subscribers that will literally lie to you and tell you that price respects some magical Fibonacci number. I get that you can extend your Fibonacci and it can seem like price action in the banks and institutions actually respect Fibonacci sequence numbers, but that is an illusion, ladies and gentlemen. You can change your Fibonacci numbers to thousands of different numbers and the price action will respect it, okay? This price action tool right here, this Fibonacci tool, is a tool to determine where potential premium and discount is going to be at. Do not let anybody manipulate you into thinking otherwise. If you've been holding XRP for 3, 4, 5+ years now, and you're expecting your Fibonacci sequence of the 5, 8, 6, 1, 2, 3, 4 that some moon boy has been telling you for quite some time is going to come into fruition, then you need to come up with another trading strategy because that is not accurate. Even when XRP does rally, there's going to be bullish moon boys out there that are going to say that the Fibonacci sequence numbers are being respected. Mark my words, if you went and you interviewed any bank and institutionalized traders or any hedge fund traders or anything like that, 99% of them are going to tell you that that is a hoax. They do not trade based off of Fibonacci numbers. They're not targeting Fibonacci numbers or anything like that. That is a hoax, ladies and gentlemen. Okay. I'm sorry that I just went on a rant. It's just disgusting to see people attempting to teach people to trade that way. So proper Fibonacci sequence numbers. Okay. drawing your fib from the higher low after the market swept liquidity. So again, extreme detailistic perspectives on how to draw your Fibonacci. Here's the liquidity sweep. Here's the candlestick wick that wicked beneath a double bottom formation. So London set the liquidity, New York swept the liquidity and showed us a formation that it wanted to continue with bullish order flow, which is a higher low, higher high formation that breaks previous market structure. I've told you guys multiple times, you're going to take your fib from the higher low after the sweep of liquidity to the high that breaks market structure and extend it over to the right-hand side. And you're going to wait for a proper risk to reward ratio. Remember, the banking institutions cannot just put in one order after they sweep liquidity and put in an order. They have to add to their order multiple times. This is what creates the trend in the market. This is what creates, look at this, ladies and gentlemen. Here's the low preset or pre-engineered into the market. Here's the sweep. Here's the match of momentum, either that breaks structure or just matches momentum. Here's the higher low from the first order that the market makers put in. Once the market makers have made this pattern, a sweep of liquidity beneath the low, okay, attacking some pre-engineered highs in the market, creating a higher low to add to their sweep of liquidity that shows us the willingness to move the market higher. You're now getting in to the market over to the right-hand side, utilizing your Fibonacci tool. Well, how can you determine where the market makers are going to add to their order? They're going to add in the form of discount. So you're going to take your fib from the low to the high and wait for the market to retrace to give you a sound risk to reward ratio. Then you pull the trigger once the market is in the form of discount and you buy price looking for higher price levels or logical target areas to take your profit from. Okay, that is exactly what we did here at CYPRX. So as you guys can see, the market opened during New York session. We were at a high. The market retraced into discount from where they bought from after the sweep of liquidity. The market broke out of the manipulation window. We also tapped in the 62 to 79% discount, which I told you guys multiple times in the past that is where the banking institutions like to buy from. We put a sound risk to reward ratio on, only risking 1% to make about 4% on this trade. And you guys can see now how that played out to the T. Again, logical target areas. We also had early premature sellers and London set liquidity above highs. You guys can see here that we had a proper Fibonacci extension of the 200% fib extension. Again, if you guys are interested in learning more about Fibonacci sequences and how to properly draw them on and how to properly identify liquidity in the market, manipulation in the market, specific times in the market, understanding structure properly, okay? Ladies and gentlemen, the link is in the description down below. I hope that you guys enjoyed this video breakdown for the technical analysis aspect. Now, just to move over real fast to the fundamentals. I know that this is a long video, but if you're here and you're a real subscriber here at CYPRX, I'm sure 110% that you enjoyed this video breakdown. Smash that thumbs up button for us. It does help out, okay? This is from the U Today. The SEC slams Ripple-friendly firms for attempting to help defendants. Of course they do. Of course they do. So I'm sure that you guys saw in the news past recently that there was a couple of firms and businesses submitting amicus briefs to help out with the case, saying that they need XRP, utilizing it as a currency for their business. And of course, the SEC is going to come out and attack them. So let's go ahead and see what this article has to share. The SEC has slammed the movements for attempting to offer evidence that it is outside of the constraints of discovery restrictions. That's hilarious, okay? So nobody is allowed to prove that XRP is utilized as a currency, I guess, according to the SEC. The SEC has completely overstepped its boundaries. I don't know why nobody in Congress is just completely checking the SEC. It's way out of hand and it's got to stop, okay? So anyways, as reported by You Today, iRemnant, a remnants company based in the Philippines, said that it was interested in the outcome of the lawsuit because of its heavy reliance on Ripple's on-demand liquidity ODL solution, which uses the XRP token as its bridge currency. The company claimed that it had deep knowledge of the technology and it expressed its desire to aid the court's evolution of the SEC's arguments. It's just interesting now that they're going ahead and saying that, I mean, they're pretty much mocking and slamming people for going ahead and saying that XRP is utilized as a currency. It's just interesting. There's got to be something going on behind the scenes. If you're not awake and aware to what's going on, watch some of my previous YouTube videos. Here's another article from Cointelegraph. XRP price could rally by 50% based off of the comments from a former SEC director. Mark my words, if XRP rallies, it is going to be because the DXY depreciated in value. I completely understand, right, that everybody's hyped about this court case settling and whatnot. But ladies and gentlemen, I've told you guys in previous videos, the crypto fundamentals do not move the market right now. Until utility kicks in and until institutional and mainstream adoption really comes into fruition, when there's regulations set in place, No fundamentals will move this market, ladies and gentlemen. The strength of the United States dollar is what determines the directional price action of XRP and the other cryptocurrency markets. So mark my word, I'm telling you guys right now that if we do see some bullish hype or some bullish fundamental come out, okay, for XRP, mark my words, the United States dollar is going to drop at the same time. Okay. And then I'm going to be able to prove to you at a later date that the price action on XRP did not move because of any bullish fundamental, and it moved because of the depreciating price of the DXY. Mark my words. So with that being said, as an investor or a day trader, hopefully you determine what type you are, go and check out the DXY. That should give you a directional bias on which way the cryptocurrency right now is going to move. I'm not going to sit here and say that that's going to be determined for forever, because who knows the future. But as of right now, bullish fundamentals, okay, and all of this gibberish on the internet, that does not move the market. Okay, investor sentiment is specifically involved in the DXY strength right now. Right, blessings to you guys. Pay attention to detail. Don't be manipulated out there by bullish moon boys or any of these influencers out there that aren't actual day traders. Instead, understand that they're investors, and most likely they had you buying cryptocurrency last year in 2021 at a top. Blessings to you guys all. As always, be cognizant, be aware. Smash that thumbs up button, subscribe to the YouTube channel before you head off. I'll see you guys in the next video breakdown.
Won't stop till I hear him say